Meet Tom. Tom is worth $4 billion. He owns a private jet, 3 mansions, and a yacht the size of a football field. And last year, Tom paid almost zero in taxes. Legally, not a glitch, not a loophole they forgot to close. A system built specifically for people like Tom. And today, we are going to expose every single piece of it, from the very beginning. Here is something nobody tells you in school. The tax system was not built to be fair. It was built by people who had money for people who had money. And the first thing they made sure of is that the people at the bottom would always pay the most. Think about it. When you get your paycheck, the government already took their cut before you even see the money. 30%, sometimes 40%, gone before you can blink. You work 40 hours a week, you give almost half of it to a system you had no say in building. But Tom has never had a paycheck in his life. Not once. Because Tom understands something so simple it will make you angry. Earned income is the most taxed thing on earth. The moment you trade your time for money, the government is watching. But if your money works for you instead, the rules change completely. And that is exactly where Tom starts. This is the first weapon in Tom's arsenal. 3 words. Buy, borrow, die. It sounds insane, but this is exactly how the ultra-rich fund their entire lives without paying a single cent in income tax. Here is how it works. Tom buys assets, stocks, real estate, businesses. These assets grow in value every single year, but Tom never sells them. Because the moment you sell, the government is there. Capital gains tax, up to 20%, gone. So Tom holds, and holds, and holds. Instead of selling, Tom goes to the bank and borrows against his assets. He walks in and says, I have $1 billion in stock, give me $100 million in cash. The bank says yes, immediately, no questions. Because the bank knows Tom's assets are not going anywhere. Now, Tom has $100 million in his pocket to spend on whatever he wants. A new mansion, a super yacht, another private jet. And here is the beautiful part. Loans are not income. The IRS cannot touch a loan. You do not pay tax on money you borrow. So Tom just funded an entire luxury lifestyle and paid zero tax doing it. And when Tom eventually dies, his assets pass to his children with something called a stepped up cost basis. All those years of gains wiped completely clean. The tax bill that should have been billions of dollars simply disappears. Forever. This one strategy alone has saved the ultra rich more money than most countries collect in a year. But Tom is not done, because Tom still has one massive problem. When he dies, the government wants 40% of everything he owns. The estate tax. On a $4 billion fortune, that is $1.6 billion, gone in an instant. So Tom calls his lawyer, and his lawyer introduces him to something called an irrevocable trust. Tom does not give his children a single cent directly. Instead, he locks his entire fortune inside this legal structure. The trust owns the money, not Tom, not his children. His children are simply the beneficiaries. They can use the money to buy mansions, cars, private jets, anything they want. But because they do not technically own the assets on paper, there is no inheritance tax. The government cannot touch it. And there is a bonus nobody talks about. If his son gets sued, the lawyers cannot reach into that trust. If he goes through a divorce, his ex-wife gets nothing. The wealth sits completely untouchable, passed from generation to generation, growing forever. Now, here is the chapter that will genuinely surprise you, because this one is hiding in plain sight and almost nobody outside of the ultra-rich knows it exists. Tom owns real estate, lots of it. Office buildings, apartment complexes, commercial properties worth hundreds of millions of dollars. And every single year, the government allows Tom to write off the wear and tear on those buildings. This is called depreciation. Here is why that is extraordinary. Tom's buildings are not losing value. In the real world, they're going up in value every single year, but on paper, for tax purposes, the government says they are declining. So Tom gets to subtract millions of dollars from his taxable income every year for an imaginary loss that does not actually exist. A billionaire with enough real estate can generate so much depreciation on paper that it completely wipes out any income they have. They made money. The buildings made money, but on paper they show a loss, and losses mean zero tax. This is completely legal. It is in the tax code, and it has been there for decades. But here is where it gets truly interesting. Tom does not just want to protect his money. Tom wants to grow it, spend it, and look generous while doing all of it. So Tom creates a charitable foundation. He donates $100 million into it. The government immediately hands him a massive tax deduction. Tom looks like a hero. His name is on buildings. People applaud him at galas. But here is what they do not show you. Tom's foundation still invests that money. It buys assets, grows the portfolio, and Tom's family controls every single dollar of where it goes. The foundation pays for Tom's travel to conferences. It funds research that benefits his businesses. It gives out just enough money to satisfy the legal minimum requirements. The rest keeps compounding, completely sheltered from taxes. Tom just got a tax break for keeping his own money, and the world called him generous for doing it. Now step back and look at everything we just covered. Tom earns no salary, so he pays no income tax. He never sells his assets, so he pays no capital gains tax. He borrows against his wealth to fund his lifestyle, so his loans are completely tax-free. He locks everything in a trust, so his children pay no inheritance tax. He uses depreciation to erase any income that does slip through, and he donates to his own foundation to get deductions on top of everything else. Every single layer working together. A perfect system, built legally, maintained legally, and completely out of reach for anyone who does not know it exists. This is not cheating. This is the system working exactly as it was designed to work. And the people who designed it are not in your tax bracket. They never were. The difference between Tom and everyone else is not intelligence. It is not luck. It is not even money at the beginning. It is knowledge. Tom knows the rules of a game that most people do not even know they are playing. And the people who benefit from that ignorance are counting on it staying that way. But now you know. And knowing is where everything starts.